My phone died before I could finish recording my vlog, which had been going on for like almost 50 minutes at that point, so it was probably a good thing that it turned off. Is it going to charge? It's at 0%. Hello? It's been plugged in for like a minute or two. It should be at 1 now. Dang it. Anyways, let's listen to this next song, which is one of my favorite songs from the soundtrack. Oh, yay, my computer's doing that thing again. That's basically the whole song, and it just loops again. Yeah, that's a pretty dang good song. One of my favorites from the soundtrack. I can't go and just show you all the good songs from the soundtrack. It's going to be a massive waste of time. I'll just let this play. What was I about to do? I was about to do something. I was gonna talk about something. I totally forgot what it was. What was I about to talk about? I totally forgot. God dang it. Great. I don't want to do a stinking exam. Oh, open book. It's an open book. It's okay. We have our textbook. We have our scratch paper, our pen, calculator. Calculator fully charged. Yeah. Well, not fully, but it's good enough. Okay, my phone's at 5%. I can turn it back on. Surely. I tried turning it on at 0% and it turned on for like 30 seconds and then it turned itself off again. Come on, dude. Are you kidding me? What was that? Why can't you just turn on? You literally were on. You were on just then. And then you were like, oh, actually, I'm going to turn myself off. Oh, I could have stayed on, but I didn't because I'm dumb. Okay, it's at 5%. It better not turn off. Also, it better charge quickly because my stinking charger charging station, what is it called? Power strip. It doesn't seem to charge it very quickly. Anyways, it's at 6%. Let's see how long it's supposed to take to charge. Oh, 2 hours and 49 minutes. That's terrible. How about you not take that long? How about you take only 1 hour to charge, not 2 hours? It switched to 2 hours, but it's still not good. So I'm going to unplug and replug and see if it's actually going to take that long. Oh, it says now it's going to take 6 hours. That's great. Now it's going to take 2 hours. No, that's unacceptable. It's not supposed to take 2 hours to charge a phone. Are you kidding me? Fine. One of these dumb... Oh, did I just go on dumb? Exam! Fun fact, he gave every person in the class 2 points of extra credit there. 2 out of 0.001. Actually, it was 1.99 points of extra credit. He gave everyone that much extra credit because of this question. This question had no options, so he gave, as a result of this question, he gave everyone 2 points of extra credit. But this question was only worth 1 point, so I don't know why I did that. Were there 2 bad questions? Anyways, as a result of that, and since I had actually gotten the question right on the exam by chance, I accidentally got it correct. That means I basically got more points than anyone else in the class. Unless they answered the question right as well, but I got more points than if people answered it wrong. And as a result, my grade is now 88%. Oh my god. Man, if I hadn't skipped this assignment, gosh dang it, my grade would not be 86%. Anyways. Oh, I don't want to take this test. It's over chapters 1 through 7. Also, fun fact, we only have 3 more weeks of classes until summer's over. Summer semester is over. And then it's very, very likely that my days of taking college classes might be over. It might be over. But we will see. It all depends on what my dad says. What my dad says when I ask him about it. Will he let me do YouTube full time? Or will he tell me that I need to do something else part time at the same time? If it was my mom, she would obviously make me do something part time. My dad, I literally have no idea. I'd say it's like a 50-50 chance that he does one thing or the other. I actually have no idea. Okay, can I stop? Can I stop? I don't want to do. Oh, I don't want to do this exam. I don't want to do it. I don't want to do this exam. I don't want to do this exam. I am fat. I am very fat. The camera is not close enough. And this is what my hair looks like no matter what I do to it. It's like a weird shape. My hair is a weird shape. It's the most normal. It's like the most normal possible way to brush your hair, and yet it retains its shape on top of my head. And nobody's hair looks like this. Nobody's. So I'm different from everybody. I literally can't think of a single person whose hair looks like this, that has this shape. And basically, it may be as a result of cowlicks. If it was completely flat, if I put water in it and brushed it, then I could make it flat. But I don't know. It just puffs up in weird spots to make it look like this. This is a totally and completely normal haircut with short, somewhat short sides and longer top. It's the most normal haircut you could get. Okay, probably not. I don't know what's the most normal haircut you can get. And also, I weigh 170 pounds. And I am 5'6". Might be 5'5.5" or 5'5 3/4", but I just say I'm 5'6". BMI. Have I reached the overweight metric? I think I'm on the high end of it, but I'm not quite on the overweight part of it yet. 27. Oh my god. Wait just a sec. I am overweight. Holy crap, I'm overweight. I used to be in like the 23. Wait a minute. I don't remember it being that high. I literally remembered calculating my BMI, like at some point. Back a while ago, and I literally had a BMI of like 23. I can't believe I'm actually overweight now. According to this website, I am overweight. According to the official BMI scale, I am in the overweight section here. That's a nice slap in the face. I think my dad said he lost weight, but I don't remember how much he said. My dad's BMI is actually still higher than mine. I think he's at 190. He used to be 200. Oh wow, he was almost to the obese part. Nice, but he wasn't quite there. And if he's at 180, then his BMI would end up being less than mine. But I think he still might be at 190. I'm not sure. But me, I am overweight. I am right in the middle of being overweight. How the heck did I used to have a 23 BMI? I remember calculating BMI a while ago and I was like, oh, 23. I'm still normal, but it's on the higher end. And I remember a few years earlier than that, I calculated it and it was at like under 20. Well, this is what a person with a BMI of 27 looks like. Yes, this is what they look like, apparently. They look like this. Is it hard to tell? When you're looking at yourself in the mirror, how easy is it to tell whether you are overweight or whether you are skinny? Because when I look at myself right now, you can't see farther below this point, so you can't really tell. But I don't look that fat, honestly. But maybe in terms of health metrics, this is not a healthy weight. Gosh dang, my life, I didn't do this. Are there any conceptual questions? Ooh. My God! Question 13 is so long. What? What is this? Oh, it's not that bad, but there's just a lot of information given. It seems that the first 12 questions are multiple choice, and then the last 4 questions are submitting a file. It's so dumb. You have to submit a different file for every question. That's kind of bad. That's kind of inefficient use of space, or is it? Creating a different file for every question? I think it'd be more efficient to put all the questions into one file. Oh my God, you're supposed to tell which one is service, retail, and manufacturing. Oh wait, that's very easy. Never mind. Okay, let's go through and do the conceptual questions first. Oh, the firm is growing and expanding its accounts receivable. Wait, I don't need Q. I'm not using the Q. I'm using the other two things, which are things. These. If your firm is growing and expanding its accounts receivable, and inventories faster than its current operating liabilities. Its cash flow from operations. If it's growing, expanding its accounts receivable and inventory. Hello, folks. Guess what? An accounts receivable. Oh, wait, I'm done. That's an asset. Idiot. Those are two assets that do not actually bring in cash. They are negative cash flows. But its liabilities, its operating liabilities is if you have less current operating, if you have less liability. If you expand your accounts receivable and your inventory, then you have less cash. And if your current operating liabilities is not expanding, that's completely irrelevant to the question. In a statement of cash flows, hey, wait just a sec. Shouldn't this be from chapter 10? We didn't talk about statement of cash flows. We're talking about statement of cash flows. We didn't talk about statement of cash flows? Isn't this from chapter 10? Chapter 10 is talking about the statement of cash flows. I really hope somebody from our class messages the professor and is like, hey, wait a minute, aren't these questions from chapter 10? Because this seems fishy. Why are these questions asking about a statement of cash flows when we haven't? I'm going to look at chapter 10 and see if there's something about that. Because I don't know what the heck they're talking about. I read 1 through 7 and I don't know what the heck they're talking about. What is an equity instrument? This is so definitely from chapter 10. Dude. Should I even bother with these questions? The sale of equity securities. Okay, I'm looking at the basic summary. It says the return on equity securities is an operating activity. What about if you issue an equity instrument? Wait, if you issue an equity instrument, that means you're issuing stocks, right? The sale of equity securities. The return of equity securities. Dividends. Okay, so I think if you issue equity instruments, it would be cash inflow from a financing activity. But guess what, buddy? That's from chapter 10. Ha ha ha! That's from chapter 10. What's the first math question? Okay, this is not from chapter 10. This is a LIFO thing, so... Or no, this is not from chapter 10. Okay, and what is asset turnover? Oh, by the way, buddy, asset turnover is from chapter 8. My God! My God! He's asking questions from all kinds of different chapters for this test. What is he doing? Asset turnover is... I'd say it's B. But guess what? That's from chapter 8. So far I've answered... How many questions? So far I've answered 1, 2. I've answered 3 questions on this test. And none of them are from chapters 1 through 7. There are 2 of them are from chapter 10 and 1 of them is from chapter 8, as far as I can tell. Which of the following might an analyst... Oh my God. Okay, actually maybe... I think maybe this one might be from an earlier chapter, but it's kind of hard to tell. If you make revenue from the sale of inventory, is that an unusual or non-recurring item? All 3 of the other ones are either non-recurring or unusual. So I'd say D is the answer. D is the answer. That one, it's hard to tell if it's from a different chapter. I think this one might actually be from like the income statement chapter or something. Or one of the other chapters. Sustainable earnings represent... Oh my God! I think this is from chapter 8. Even though I understand the question, I think it's from chapter 8. Sustainable earnings. I don't think we ever talked about that term. Oh, you know what's lovely about this textbook? That it doesn't actually put key terms in bold print. That's funny. Does this textbook ever use the term sustainable earnings? I'm going to look in the index to see if they do. I don't think they do. First of all, it's not in the glossary, is it? They have a glossary, but they don't put these terms in bold print. Very bad. What the heck is this textbook doing? They don't put key terms in bold print? What the heck are they doing? What the heck are they doing? First of all, do they even have the term sustainable earnings in here? Nope. No, it's not in the glossary. Let's look in the index. Thank you for asking a question about a term that is not in the glossary. Now let's look in the index. Sustainable. Oh, that's funny. The word sustainable earnings is not in the index. I will look at the word earnings and see if it's there. That's a bad sign. Why would you ask a question about a term that is not even in the index? Fun. That's very funny how you would do that. Earnings. Nope, it's not in here. Okay, what am I even doing with my life? I know what sustainable earnings means. Earnings represent the level of earnings expected to persist in the future. Oh, you've got to be kidding me. And the growth in the levels of earnings? God dang it, now I don't know if it's A or B. Because it's not in the textbook! Or is it? It's not in the index, it's not in the glossary. So where is it? Is it in chapter 8? Is it in one of the other chapters we already read? I don't remember anything about saying this sustainable earnings. Was it in chapter 4, income statement? I don't know. Oh. March at BP. Which of the following scenarios is consistent with an increasing cost of goods sold to sales percentage and an increasing turnover? An increasing cost of goods sold to sales percentage. Wait, cost of goods sold to sales percentage and an increasing inventory turnover. By the way, an increasing cost of goods sold to sales percentage, that's the ratio of inventory turnover. That's inventory turnover. That is the definition of inventory turnover. If you look at chapter 6, if you do cost of goods sold divided by, oh, never mind, I'm stupid. Cost of goods sold divided by, if you do cost of goods sold divided by sales, that is equal to, there is no such term for that ratio. That means your costs are increasing. But if your inventory turnover is increasing, it's a good thing. If you have an increasing inventory turnover, you're selling stuff more quickly, right? But it all depends. Do they mean an increasing days in sales and inventory, or an increasing? Or no? Are they saying in inventory turnover in days increased, or are they saying the inventory turnover increased? Because those are two different things. So I hate the wording of that question. This is a bullcrap question. I love this question because they don't specify whether it's days, inventory turnover in days, or if it's just inventory turnover. Well, if they're increasing cost of goods sold, if you increase the price of a good, I love this bullcrap question because they don't just specify if it's inventory turnover or inventory turnover in days. if it's inventory turnover, that means A is wrong. If you have a lower margin, you have a lower profit, gross margin, right? I love how they don't specify what they mean by lower margin. It's a faster moving product. Which of the following companies would you expect to report significant amounts of cash provided by financing? We had the same question on our other test, and I think I got it wrong. I'm going to look at it. It's open book, and by open book, I guess that could technically include open previous part of the test. He repeated the same question on both tests. Oh, no. And is that one I got wrong? Which? I didn't know. I'm certain I saw it on here. Let me see. Come on. Come on. I got this one wrong. Got this one wrong. I got this right, huh? Oh wait, that was an easy one. Never mind. Aha! Same question on both. And I got it right. Nice. It was one I got right. Okay, that's good to know. I feel like this should be chapter 10 though. I don't know. Because if you have lots of cash, that's talking about the amount of cash. And that's from chapter 10, right? Okay, they have a current ratio of 6. My God, that's high. They have way too much inventory, and they have way too much assets relative to the amount of liabilities. Like, oh. I think D is the one where it's a problem, because I think those are all explanations. They're just saying which one is a bad scenario. I'd say A is not bad. B is not bad. C is not bad. D is bad. Like, that's what they're saying. Which one of these is bad? Well, if they're experiencing a recession and their inventories are increasing, that's bad. D. Wow, we already got through all the conceptual questions, I think. Okay. Let's go with the math questions now. Sharp Company offers an unconditional return policy to its customers. During the current period, the company records total sales of this, and the cost of merchandise is this. 4% of sales will be returned. Okay. So here's what you do. You do 96.96 times your cost of goods sold will be the same, but your sales revenue will be less. So anyways, if they return it, it's going to be fully refunded, I would assume, right? Anyways, we have 850,000, and then subtracts 340,000, and you get 476,000. I hate my freaking life. How is that not right? They're only going to make 96% of the 850,000. And then they're still going to have the same cost of merchandise. The same. What? What? What are you doing? How is that not right? What the heck is this question? God. This is totally how you're supposed to do it. What? Oh. If they return your product, you give them the refund for the product. But you still have the same cost of goods sold because you weren't able to sell the product, but you bought the product still. God dang it! How is this wrong? I'm not gonna do it right now. I'm just gonna have to guess a random number because I don't think there's just thinking any other way to do that question. The January 8th, 2017 financial statements reported at Candace Incorporated reported the final what is the average days inventory outstanding? My God. I love everything. They use a different term than both of the terms used in the textbook. Oh my God. Oh my goodness. So we're going to do cost of goods sold. What is the average inventory? Oh, come on. LIFO reserve? Is that even relevant? Don't you dare make me answer this question wrong because of the stupid LIFO reserve. Oh. Parker Company recognized this much of cost of goods sold in 2016. I love how they have a cash question. This is supposed to be an operating, which is supposed to be a cash flow statement question, which is from chapter 10. Oh! right? It's supposed to be. This is supposed to be from chapter 10. Any questions relating to cash is chapter 10. Any questions relating to cash is from chapter 10, which we did not cover. And we're not expected to study for this test. Okay, wait. Recognize 655. Oh, come on. How do you do this? Gosh dang it. It had this much inventory at the beginning of the year. It sold a certain amount of inventory and bought a certain amount of inventory. Okay, here's what happened. They sold 655,000 of it, then bought a certain amount of it, and ended up with 230,000. So here's what you do. The amount they had at the beginning was 325,000. Then they sold 655,000. So how much did they have to sell to get from this number? So basically, what's the difference between these two numbers? 3 100,000. Oh my god! Wait, no. What? Oh. Because you have this much, then you buy $100,000 of inventory, you end up with 425,000. Oh, I did the math wrong. How did I do this wrong? $560,000. I think that's how I did it. Okay. So you have 325,000 plus 560,000 minus 655,000. So the answer is 560,000. See. Here we go. Another cash question. Here we go. Here we go. Reported sales of this much in 2020. How much points are the other questions worth? 8, 6, 3, 6. Okay, question 10. Sales of this much. Sales. How much cash did they collect? Chapter 10. Okay. Chapter 10. They made this much money in sales, but they didn't collect all of that cash. So first of all, the customers owed them $65,000 at the beginning of the year. Wait, how is accounts payable even related to this question? Accounts payable? That's if you're buying inventory, not if you're selling it. If you buy inventory and you buy it on credit, then you have accounts payable. So what the actual crap? Is that just an irrelevant piece of information? Anyways, customers owed the company $65,000. Then they owed the company another $345,000. So the total amount owed is this much. They paid a certain amount of it, and by the end, they only had $90,000 owed. So if you subtract $90,000 from this number, you should get the total amount of cash collected, $320,000. That better be right. And guess what? That's from chapter 10. I have now answered every I've answered every multiple choice question except for question 1, which is a piece of bullcrap because the correct answer is not in the list of answers, as far as I can tell. What is 4% times 850,000? What is 850,000 minus 34,000? What if you subtract 340,000? I got 476. That question is a piece of bullcrap. So anyways, we will now answer the last 4 questions. We actually have almost 2 hours to answer 4 questions. So I think we're making good progress. But they're all might take longer than the other questions. So what is this question? There's a lot of information. We have the following balance sheets and income statements for Patrick Devices Incorporated, a manufacturer of small electronic devices, including calculators, personal digital assistants, and MP3 players. For the purposes of these questions, assume that the company has an effective tax rate of 35%. Well, you wouldn't have had to tell me what the tax rate was, because the balance sheets are supposed to tell you the exact amount of money paid in taxes. Because, watch this. If you go to the income statement and you go down and you go to the tax, look at this. They had to pay this much money in taxes. You didn't need to stick in tax rate unless they want you to somehow use the tax rate to answer the question. What is the accounts receivable term? Oh, I have to make a separate document for 4 questions. That's weird. Oh. What is the question? Number 13? I love how a bunch of questions were from chapter 10. Come on, man. Need to answer these questions. Need to answer these questions. Need to answer these questions. Come on, 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 come on. Stop being like, stop. Stop. Save. Return. Come on. God dang it. Stop taking forever, man. Exam question 13. Okay. Question 13, we have, I think, part A, B, C, and D. Nope, it's part 1, 2, 3, and 4. Okay. We have part 1. Do you have to show your work? I'm gonna maybe show my work. Maybe you'll give me partial credit if I show my work and still get it wrong. Who knows? What is the accounts receivable turnover ratio for Patrick in 2007? Well, the accounts receivable turnover ratio is net sales over average gross receivables. Okay. Accounts receivable turnover ratio. You know what? I'm just going to copy all this stuff. It's much easier by doing this. Right. Okay. So it is net sales. Net sales is net sales in 2007. Net sales in 2007. Net sales. The ratio, the number, the absolute values of the numbers don't matter because they're in ratio. The net sales in 2007 was this number. Then you divide the net sales by average gross receivables. So receivables, gross receivables, in fact, they don't specify gross receivables. So they don't specify gross receivables. So we're going to just have to use receivables. Right? So we have receivables for 2007 and 2006. We use both of those numbers because this is the year end and year beginning number. So what you do is take the average of this number and this number. Okay. 771,580 plus 775,250 divided by 2. Okay, so 773,415. Okay, and now I do the calculation. 11, 4, 5, 500. 11, 4, 5, 5. There are 3 5s. 11, 4, 114, 555, 0, 0 divided by 773,415. 14.81. What is the inventory turnover ratio for 2007? Okay, inventory turnover ratio. Inventory turnover ratio is cost of goods sold. What is the cost of goods sold in 2007? What is the cost of goods sold in 2007? What is the cost of goods sold in 2007? 8026. $8,026,450 divided by average inventory. Again, well, no, it's not again. Average inventory for 2007, you do this, the average of this and this, so 1320150 plus 1254 600 Okay, we got the number 1,287,375. So we have 8,026,450 divided by 1,287,375. Got 6.23. Cute. Ah, dang it. What is Patrick's return on common shareholders' equity for 2007? Oh, I love everything. I love everything. I love everything. I love everything. This is from chapter 8. Is he doing this on purpose, asking questions from chapter 8 because we technically covered it today in class? What the heck is this? Wow, you just asked a question from chapter 8. I am not even surprised in the slightest. I am not surprised at all that you would ask a question from chapter 8. What is the return on common shareholders' equity? It says return on common equity is equal to net income before non-recurring items minus preferred dividends divided by average common equity. So guess what? Did they even list preferred dividends? Let's see if they talked about preferred dividends. I don't know why they have the tax rate here. It's not even relevant to the question. We do have preferred stock. Oh. Okay. Oh, crap. Preferred dividends? Wait, what is preferred dividends? That's not... I don't think that's the same thing as preferred stock, obviously. Yet again, here we go. I have to now read part of chapter 8 I have not yet read because it was not supposed to be on the test. I have to see what they mean by preferred dividends. Where is it? Where's return on common equity? Can you please explain how you come up with the preferred dividends? The preferred dividends appear most commonly on the statement of stockholders' equity, which was not provided in this question. This amount so you have to, common equity is common capital stock and retained earnings less common treasury stock. This amount equals the total equity minus the preferred capital and any non-controlling interest included in equity section. Guess what, buddy? I don't think I can find the preferred dividends. They didn't give you an income statement, so how are you supposed to know? It's not preferred stock, it's preferred dividends, which is different. They didn't tell you the preferred dividends. And of course, you use the term minority interest when that term is now outdated. I love everything. Actually, they gave you the preferred dividends. Never mind, I'm stupid. Okay. But here's the complicated thing. The complicated part of this question is how to calculate common equity. So I think what you have to do is common equity is equal to total equity. What is total equity? Do you need average common equity? Wait just a minute. Let me look at the ratio. Oh, it is average. Oh, are you kidding me? God. We need the beginning of the year, beginning, and ending. Oh, dude. I love how we're doing something from chapter 8. God dang me. Oh. So what they do is total equity minus preferred capital and non-controlling interest. What is total equity for this, for 2007? No, for 2006. We need the 2006 number because we need all these numbers we're about to do are for 2006 because that's the beginning common equity. So we need to look at 2006 balance sheet. So why do they have 2005? Is that even relevant to the question? It better not be, or I better at least know if it is. It's not relevant to this current question. It better not be. The middle one is 2006. So you know. The total shareholders' equity is this number. That's total shareholders' equity for 2006. Oh. Minus the preferred capital. Minus preferred capital. Minus preferred capital. So guess what? Preferred stock is subtracted. Minus 850,000. That better be right. Minus 850,000. And then subtract non-controlling interest or minority share, which is not the right word. So minority share of interest, minority share, preferred, common, additional paid, retained earnings, treasury, shareholders' equity, not included. It's not included here, so we don't need it. So since it's not included, I won't be doing it. So beginning common equity is 1,861,550 minus 850,000 1,011,550 ending now we'll do the same thing but for 2007. 2007, the total shareholders equity is equal to this number. What the actual crap is B? Oh, I'm an idiot. Okay, ending common equity is copy. Minus the preferred stock, 850,000 again. 2298000 minus 850,000 is 1 comma 448 comma 000. Average is 1011550 plus 1448000 divided by 2 is 1 comma 229 comma 775. Now we need return on common. Okay, we're just gonna do R. What's this thinking? OCE. Common equity equals net income before non-recurring items. Okay, so what is the net income before non-recurring items for 2007? For 2007, what is the net income before non-recurring items? Net income before non-recurring items. Net income before non-recurring items. Okay. They don't have any non-recurring items here, as far as I can tell, so we just have this number. So we have this number here. That's the net income. That's net income. And we subtract preferred dividends. But guess what? I love how all these numbers are in thousands, and then all these numbers here are not in thousands. Oh, you could have told me that. Oh my god. Is it the number of dividends? Wait. No, the amount. You idiot. I don't think you need the number of shares outstanding. Oh, we do need that for the next question. But the preferred dividends amount, you're going to get a negative number in the top. So, this is bull crap. Oh God. I think all these other numbers are in terms of thousands, but the preferred dividends one is not, which should have been specified. It should have been specified. So anyways, it's 85,000. It's 85,000. So you do that minus that, divide by average common equity, which we've already found to be 1,229,775. And we now do this. This is taking forever. 603,480 minus 85,000. 1,229,775. That's a huge number. That doesn't sound right at all. God dang it. Why did we get such a large number? That doesn't sound right. That doesn't sound right, but I can't go with anything else. I already spent too much time on it. What is the earnings per share? Guess what? They don't have that issue. Our textbook did not talk about earnings per share. Wait, I'm gonna look in the index. What's the next mention of it where it actually has the more complicated equation? They don't have it in the list of equations, which is wonderful! Wonderfulness! Do we have earnings per share back here? Oh, I found it! Oh my god! I found it right here. Never mind, I wasn't expecting that. Okay. We found earnings per share, net income minus preferred dividends over weighted average number. Weighted average? How do you do the weighted average? By the way, that's from chapter 9, so bullcrap. Anyways, we have net income. Net income for 2007. It's this, right? We have to put it in absolute numbers because... Okay, this one didn't have to be in absolute numbers because every single number was expressed in terms of thousands. Would I have gotten a different answer? I'm going to do it again, but I'm pretty sure I'm getting the same answer. 603,480,000 minus 85,000,000 122,977,5,000. Yeah, I got the same number. This question I do have to express everything with 3 zeros after it because we have the number of shares outstanding in normal numbers. But I could also express that number without the 3 zeros at the end too. If you divide every single number in the equation by 1,000, it still works. The number you still get the same answer. So, anyways, net income is this. This one question is taking forever. Net income minus preferred dividends. So preferred dividends. So preferred dividends is 85,000 divided by the they say weighted average. Well, I don't think we're doing that, so we're doing average number of common shares outstanding. So the outstanding shares here, we're going to calculate the average of those two. So 308,515 plus 303,095 divided by 2. 305,805. I expressed every number in turn as the number divided by 1,000, so it should be fine. I have to double check again because that number seems way too large. I'm an idiot. 603,480,000 minus 850,000 divided by 305,805,000. Same number. Why are we getting freaking 1.69? This is a lot. 169.55. This seems way too large. But I don't freaking care anymore. This is all I'm doing for this question. Because that took so long. That was so long to answer that one question. Now we have 3 more questions. Before we see how many questions we have, I'm probably going to go to the bathroom, but also I was going to see how much time we've left. So we started off with 2 hours left. How long did it take to do this one question? How long did it take to do question 13? It took 35 minutes. And we need to take an average of about 30 minutes per question to finish on time. So yeah, I think we're okay. We just need to maybe go a tiny bit faster for the last 3. So anyways, now I'm going to the bath. Oh, double checking to make sure it's not recording. The camera. Yes, it took me 35 minutes to do that one question. And guess what? Two of the questions weren't even from chapters 1 through 7. Oh man. Question number 14. We have 3 questions. We have what's the current ratio? What's the quick ratio improvement? What's days of other financing? Oh, what? What is days of other financing? What? 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 What the heck is that? What is that? Okay. Anyways, question 14. Oh, man. Fun facts. He put a multiple choice question in this question for some reason. What's the current ratio? Easy question. I know how to calculate current ratio. You know what? Okay. Current ratio. I'm just double checking, but it's stupid to even look this up. The current ratio is current assets over current liabilities. So we have current assets for 2005, current assets for 2005, current assets is this. All this is in terms of, what does it say? Current liabilities. We have current liabilities for 2005. This number. Okay. So we have 2,388 964 divided by 1648 divide 753, and we have a current ratio, which is not good, actually. I think, isn't the good current ratio supposed to be more than 2? We have 1.45 rounded to 2 decimal places. Okay. Wait, is there seriously no question mark for that question? Okay, we need to calculate the quick ratio for both 2004 and 2005. What is the quick ratio? Well, the quick ratio is the acid test ratio, I think. Those are the same thing. The acid test ratio is the ratio acid test ratio. Let me just make sure. Acid hurry the freak up. Is that my recording getting laggy? Is that what that is? It's only been 1.5 hours. It says quick ratio. So yeah. How do you calculate? We have cash equivalents. Okay, first 2004. 2004. We have cash and short-term investments. All right. We have this. Marketable securities. I think they included marketable securities in the cash because they say short-term investments. So, and then we have net receivables for 2004 is this one. And then you divide it by current liabilities, which is equal to 2004. Current liabilities is this one. Copy, paste, save, and then we have to do this. Okay. 616604 plus 665828 divided by 1566237, and you get, wow, that's very tiny. Okay, 0.82. Okay, and then acid S ratio for 2005. What is the cash and marketable securities for 2005? Cash for 2005 would be this number. Then we have net receivables, which would be this. Then we divide by current liabilities for 2005. Okay, so 1267. Oh yeah, I forgot I need to put this underline. One two six seven 038 plus 665828 divided by 1566237. Oh, I'm such a moron. God dang it. 1267038 plus 490816 divided by 2388964. Oh, that's even worse. 0.74. I'm going to go to 4 decimal places because, okay, so we have actually 8188, and then this one is actually 7358. 7358 8188. it actually didn't improve. What are you talking about, man? It didn't improve. Ugh. I don't like this. I do not like this. I hate that they say improve when it didn't improve, because that makes me think I did it wrong. I hate. I hate everything. 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 Oh boy. I'm just going to put two answers. One answer is you just do this difference between the two numbers, the absolute difference, and that difference is 0.0830. Or you can do the percentage, which is 11.28. Or 276. Six percent. the absolute change was this, and the percentage change was this. Because if you do 1 minus that one divided by that one, you get the percentage change. And if you do the absolute change, you do 1 minus the other, and you get that. So I don't freaking care. I'm just making this the answer. I don't know what he's looking for. I'm going to go with negative numbers on both because they both went down. So yeah. And then finally we have days of other financing. I don't know what that means. What is days of other financing, dude? Oh, what is that? What is days? I just Google searched it. There's no such thing. Stop. I just searched it. It doesn't mean anything. There's no such thing. Oh. This one just has days working capital. This one has Do they mean days of working capital? Why the heck days of other financing? Well, I got this as the result, so let's see if that's the actual thing it wants. Can you stop? They do average working capital times 365 over sales revenue. Is that what they're looking for? Wait a minute. We have the working capital turnover here. What they do is average working capital over sales times 365. Okay, working capital. This sucks. What is working capital anyways? Wait, what is working capital? It's current assets minus current liabilities. So you... What was the year? We have 2,388,964 minus. Wait, and it's averaged. Oh my god. Wait. Oh my god. You need the average. Why? I have a free feeling this is not the right way to do it. But if I get one of those numbers, then I'm just going to answer that number. The working capital 1,648,753 2,061,852 minus 1,566,237. This plus this divided by 2, and then you do sales divided by that's sales 4, 8, 5, 8, 5, 3, 4, 0 divided by this, and then you probably do 365 divided by this. I got 46. I don't think that was one of the answers. No. What the heck is this question? There is no such thing as a days of other financing. I'm gonna look in Google one more time, see if I come up with anything, but I highly doubt it. This sucks, dude. So we're done with question 14, I think. Okay, at least it's only one question for question 15. Why is question... Are you kidding me, dude? Question 15, he gave you multiple choices for the answer? Question 15 is the same thing as this question. Oh, dude. This is not from our textbook. This is not from our textbook. What? I think I understand. This is the same type of question, but it's explained differently, I'd say. So... God dang it. This won't tell me how to do it. Stop lagging! Stop lagging! The average AR is equal to 518 plus 562 divided by 2. Accounts receivable, average inventory, average AP. God dang it. This was not in our textbook. It was not in our textbook. It was not in our textbook. Oh. What the heck is days and payables? We've never talked about any of this crap. Firm A. How much time left? Firm A. Which one is retail, service, and manufacturing? Dang you. I love lag! Firm A. Percentage. Not much cash. Oh wait, I'm done. Yeah. Firm A is I do not understand this at all. It says that Firm B has a very high percentage of plant, property, and equipment, but it has a very low amount of inventory. What? Dude. Oh. I thought this would be simple. God dang it. How can you tell from this statement? Yeah, but if you have low inventory, that means you're a service company. But why do they have high plant, property, and equipment? How can you tell the difference between merchandising company and a manufacturing company on this with this amount of information? Dude. Oh no. Look at what they say. Merchandising firms have high inventory. profit ratio. They don't tell you profit, so it's too bad. They don't tell you profit ratio, so I can't tell from that. God dang it. They say that for service firms, property, plant, and equipment tends to be low, well, for people-oriented thing. So this makes no sense. This makes no sense. Service firms shouldn't have high property and equipment. I'm just basing my entire decision on inventory. They don't have much to say at all. They just say, this is the same stuff that I already thought. This is the same stuff I already thought. I was just looking at inventory because he gave me the balance sheet statement, and they barely had anything to say about the liabilities and stockholders' equity. They only talked about the balance sheet stuff. They talked about was inventory and property, plant, and equipment. And they said that for a service firm, inventory is low or non-existent. Oh, how you can't tell the difference between a manufacturing and merchandising just based on this information. The book has barely anything to say. The book says a merchandising firm has high inventory, and then they say sometimes receivables is low and sometimes it's high. Well, that doesn't help me at all. Then they talk about anything relating to the income statement, which he didn't give in this question. He didn't give any income statement information. He just gave balance sheet information. Oh. The textbook says, it talks about service firms. The only thing they say is inventory is low or non-existent. And then they say in people-intensive services, such as advertising, investment in property and equipment is also low. Guess what? Firm B has a low inventory, but a very high plant property and equipment. Manufacturing firm, high inventory, and a high investment in property, plant, and equipment. And then they say that notes and accounts receivable may also be material. Well, isn't that the case for both? God dang it. They don't really give a definite statement on either one. One firm has higher receivables. One firm has slightly higher inventory than the other firm, and one firm has way higher plant, property, and equipment than the other firm. This firm has less inventory but higher plant, property, and equipment. Come on. They don't mention plant, property, and equipment for merchandising firms. So wonderful. God dang it. I don't think you can tell based on investments. And then the stinking firm B has a giant plant, property, and equipment. What? Are you kidding me? Why? Why? What? Dude. Wouldn't you think that a manufacturing firm would have a higher percentage of its costs? The vast majority of this firm B is from plant, property, and equipment, but they don't have inventory, so it's a service firm, I guess, because they don't have inventory. That's all you can take from it. Okay, firm B. I'm just going firm B. Firm B, service firm, because it has low inventory. Do merchandising firms or manufacturing firms have higher property, plants, and equipment? Can you please just tell me the difference? I hate you. A manufacturing business incurs more direct labor, plant and equipment, manufacturing overhead, and raw materials. A merchandising business lease on retail space, merchandise inventory, retail sales staff. The difference between these two is that maybe the one that has lower property, plant, and equipment is the merchandising firm. My God. I hate everything. God. Oh. Oh, come on. Come on. How is this part of the statement even relevant? God. There isn't even that big of a difference. Their investments are different. I don't see how that's relevant. There's a big difference in receivables, but that doesn't help you distinguish between a merchandising and manufacturing firm. Come on. Manufacturing firm. They're receivable. It says that their receivable may be material. It may be material. It depends. Merchandising firms, it depends. And credit card sales don't even count as receivables. That is such bullcrap. God. The accounts receivables for firm B is very insignificant. The receivables for one of them is bigger. The inventory for one of them is a little bit bigger, but not that much bigger. And then the plant, property, and equipment for C is much higher. For C, I hate my life. I hate my life. I hate everything. 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 everything. I hate 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 What is days and payables? What is days and payables? What is days and payables? Days and receivables. Days and inventory. Days. Ooh. 30, 43. Working capital. Dude. Stop lag. What? Why would he give you those three things? Days working capital definition, which is not in our textbook, but they did give it on that website. And guess what? It involves the working capital. It involves the sales. It does not freaking involve those three things. This is bullcrap. This is such bullcrap. This is bullcrap. Oh, man. What the heck? What? What? First of all, we never talked about days of working capital financing. We talked about sales to working capital. Well, at least the textbook did. And second of all, how does any of those numbers relate to this ratio at all? They don't have anything to do with sales. Actually, one of them does. But they give us this number. They give us this number. They gave us one number out of 3, and then they gave us one number out of the 3 again. And guess what? Payables doesn't matter at all. A receivable is an asset. Net sales. Inventory is an asset. Cost of goods sold is an expense. Which was net sales is an revenue. None of that stuff has anything to. Payables doesn't have to do with this. Payables is completely. Well, actually, it is relevant because they didn't tell you how much liabilities they have. If you add days in receivables and days in inventory, you get operating cycle. What the heck? Oh. I give up. This last question was like days of other financing. It's the same type of question. I did calculate the days working capital and I got a different number than any of those four numbers. I got like 40 something, so sales over average working capital, right? Or you could do average working capital times 360. I'm going to try one more time to do that, but I'm going to get the same number probably. Working capital. Working capital for 238,964 minus 1648753 and then 2061 852 minus 1566237. Same numbers I got last time. So the number we have average, we have 365. This number times sales revenue for the year 2005. Sales revenue 4885340. Oh, come on. 371639. I got 46 again. Not one of the numbers listed. Again. God. This is bullcrap because we didn't talk about this at all. I don't think we did. Did we talk about this at all? Did we? I don't have internet. Yes, the perfect time to lose internet is in the middle of a test. Yes! Yes! I hate you. Now I have to type it again. Wait. Stop! I still got that again. God dang it. Oh. How much time? I still haven't answered the first question. Stop being a bullcrap. Stop! Stop, 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 stop. Ow. It's probably lagging because of my recording. Dang it. Come on. Oh. Where's the freaking... What if you just added like 2 of the numbers that he provided? Like what if you just add 43 plus 31? What if you add 43 plus 38 plus 31? What if you add 43 plus 38? What if you add 38 plus 31? I added every combination of 2 and every combination of 3. So the only number I got that was in the list was 112. So I don't know. What if you subtract something? Oh boy. What if you did 43 plus 31 minus 38? Oh. Dude. What the heck? God. How about I just copy this question to Google? God dang it. Oh, come on. What the heck? You add days of inventory outstanding, days sales outstanding, and days payables outstanding. Well, guess what? We never talked about that in class. God. Why? Well, that means I guess I now know how to do that other question. God dang it. So the answer is A, 212 days. Oh. Nice. You could have just made that one of the multiple choice questions. Now we're going back to 14. We have to calculate the days in receivables, the days in payables, and the days in inventory. I don't know if I have time. Okay. Oh, come on. Days in receivables. Days in receivables. No. Stop. Days in receivables equals days in receivables. Days in receivables. Days equals average gross receivables. Average gross receivables. Average gross receivables. 4,90816 plus 665,828 divide by 2. Okay, I have to hurry. 578. I'm gonna go like this: 365, and then 365 times average gross receivables is 578,322, and then divided by net sales. Net sales for 2005, Dad. Is it really that? Come on, I don't have time. I don't have time. 578, 322, 4,885,340. We have 43.208. What the heck is days in payables anyways? Okay, days in payables. Days in payables. I don't know what days in payables is. I'm going to do the other one first. Days in inventory. $365. Days inventory. Average. Inventory, average 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 inventory. These two. 338. 599 plus 487, 505, divided by 2, 413,052, divide by cost of goods sold, cost of goods sold, cost of goods sold. Gosh dang it, cost of goods sold, cost of goods sold, cost. Oh, stop. Cost of goods. No, stop. So, cost of goods sold. Stop. Stop. Stop it. Stop it. Stop it. Stop. Come on. Stop lagging! All I did was push the backspace. What the heck is days and payables? Days and payables. How much time left? 10 minutes. Days and payables. Where's days and payables? Average accounts payable. Okay, so we have average accounts payable. We have average accounts payable. Wait. Three, 6, 5. Average accounts payable. Average accounts payable. Okay, 296. 307. I'm gonna get the wrong answer after all this crap. 334. 247. 315,277 divide by, is it cost of goods sold? Cost of goods sold is this. I'm getting a huge number, which might not even be the answer. Yes, all this effort for nothing. All this effort for nothing. All this effort for nothing. 43.2084 plus 59.3010 plus 45.2636. Hello. Do we skip days and payables? God dang it. Well, this is for question 14. I hate this so much. Oh, this is a bullcrap question. Well, my answer was like 470 something. Really? It's so far up in my calculator that I can't even, it's not even there anymore. I'm going 510 because that's discounting this 4% thing. So, but if you include the 4% thingy, then you end up with 476, which is not even one of the options. I will find out immediately. This is the most bullcrap test I've ever taken in my entire life. The correct answer was 489,600. So, but that was the only other one I got wrong. So basically, the best I can do on this test is 48 out of 50. Do you take 4% off of 3,4,000 too? 0.96 times 340,000. Why didn't I think of that? Oh, come on. You're supposed to take 4% off of both? Come on, why didn't I think of that? God dang it. I think I'm going to restart my computer because I don't know if restarting the recording is good enough. I was hoping to be done by about now, actually, with both the test and the studying for the quiz for tomorrow. I don't want to study for the quiz. I got an idea. I could study for it tomorrow morning because I'm getting up early anyways. Right? Because I was planning to get up super early tomorrow morning. So that means I'll have plenty of time to study for it tomorrow morning. Why do I have to do it today?